Hello and welcome to Investified. Have you ever wondered how successful investors identify stocks that can grow 10 times or more? In this video, we'll break down the multi-bagger stock picking strategy used by top professionals. By the end, you'll have a clear framework to find such stocks yourself, including a simple method to filter potential multi-baggers using Screener. Understanding multi-bagger stocks. A multi-bagger stock is a company whose stock price multiplies over time due to strong fundamentals, high growth potential, and industry tailwinds. Companies like Infosys, Bajaj Finance, and Eicher Motors were once small businesses but became wealth creators for early investors. The key is identifying them before they become widely recognized. Key factors to identify a 10-time stock. 1. Consistent revenue and profit growth. Look for companies growing at a compounded annual growth rate of 15 to 25% in both revenue and net profit over the last 5 to 10 years. Strong earnings growth indicates the business is scaling efficiently. High return ratios are crucial indicators of a company's financial health. Specifically, you should look for a return on equity, or ROE, above 15%, and a return on capital employed, or ROC, above 20%. These metrics, suggest that the company is efficiently generating profits from its investments. Now, let's talk about debt and cash flows. It's important to avoid companies with excessive debt, especially those with a debt-to-equity ratio above 1.0. Companies with strong free cash flow, or FCF, and low debt are, better positioned for long-term growth. Finally, consider a company's market share and the industry it operates in. Multi-bagger stocks often dominate their industry or disrupt existing business models. Look for companies in sectors with high future growth potential, such as artificial intelligence, renewable energy, fintech, and electric vehicles. Strong promoter holding and institutional interest. A high promoter holding, say above 50%, signals confidence in the company's future. If mutual funds and foreign institutional investors, or FIIs, are gradually increasing their stake, it's a good sign of long-term potential. Reasonable valuations. Even great companies can be poor investments if bought at high valuations. Look for companies with a PE ratio lower than their industry average or trading at reasonable price-to-sales and EV/EBITDA multiples. How to filter multi-bagger stocks on Screener.in. To shortlist potential multi-baggers, apply these filters on Screener.in: sales growth above 15% in the last 5 years, net profit growth above 15% in the last 5 years, RO above 15% and ROC above 20%, debt-to-equity ratio below 1, market capitalization above 500 crore rupees, promoter holding above 50%, and PEG ratio below 1.5 indicating reasonable valuation. Once you get a list of stocks, analyze their business model, future growth triggers, and industry trends before making any investment decision. Strategy. First, run the Screener query. Use Screener.in to filter stocks based on the above criteria. Next, analyze financial reports. Read annual reports and investor presentations to verify company growth potential. Third, track institutional interest. If mutual funds and foreign investors are increasing their stake, it's a positive signal. Finally, be patient. Multi-bagger stocks take time to compound. Invest with a long-term mindset. Final thoughts. Finding a 10-time stock isn't easy, but using a systematic approach can increase your chances of identifying winners early. If you found this video helpful, like, share, and subscribe to Investified for more investing insights. What are your thoughts on multi-bagger investing? Drop a comment below.